Hi traders, thanks for stopping by thetradinganalyst.com. This is Taylor and we're going to take a look at a bunch of charts here and I'm going to give my analysis and my thought process, and you're going to walk away from this video with some newfound knowledge on technical analysis as well as hopefully some profitable trade ideas based off of this free analysis video we're about to give you right now. But first, if you're not already a member at thetradinganalyst.com, go ahead and give us a visit on the home page of the website and get to know us a little bit better. If you like these free analysis videos we give to you on a daily basis, it's absolutely nothing in comparison to the membership you get once you sign up and join with the premium membership. As soon as you sign up and join the premium membership community, you're going to get instant access to the profitable trade alerts that our current members are getting on a daily basis. It's a great opportunity for you, and we'd love to help you start making winning trades in the market. All right, so let's take a look at this Twitter daily chart here to start. And I want to recall here, going back to early last week. Was this early last week? Yep, early last week, we had a false breakout, all right? We had a false breakout. So what is a false breakout? It's a breakout over a clear level of resistance. Here's that resistance. Here's that resistance. Very clear, clean level of resistance, all right? Here we are, and then we broke over it right here, okay? And then just a few days later, we broke back under it right here. So when you have a clean, very easily to identify resistance, it breaks over that, and then it breaks back under that. That is a false breakout, okay? So it doesn't become a false breakout until it breaks back below, and that's what we did right here. And then we called for some downside on Twitter. We said it was going to hit this trend line right here in the 50-day moving average. It did that, and it even went past it. So congrats if you followed along. Now what to expect with Twitter? Well, we just barely closed below this trend line and the 50-day moving average. Well, not barely on the 50-day moving average, but barely on the trend line here, which is really the most important thing that I'm looking at personally. But we did so, first of all, we barely closed below it, and we did so with a potential reversal candle. So to me, it's not considered a break of this trend line just yet. But if we break today's lows, so if we break 1703, then I think definitely it's going to come down to this next level of support, which is around 1650, okay? And then if we break the highs of today, which was 1741, 1741 is that high over there. If we break those highs, then we can potentially look for a bounce on it right here. But right now, the best setup was that short trade right here, and it really worked out really nicely, so I'm really happy for you. The next one we're going to take a look at is Apple. Apple here, again, we pointed out this was likely a bear flag when it was happening, and again, we broke out of it right here, so we got that confirmation. So congrats if you took that short trade up here, okay? Now, to me, right here, because we gapped down, we have this gap that may want to fill before we head lower, so we'll see what happens. But to me, you know, this could be another little bear flag, okay? So it could be another little instance where we're just going to trade sideways here for a little bit and then eventually break to the downside. Either way, I do favor downside on Apple. Whether we come up here and fill the gap up there at about 159.75 before heading lower or not, you know, remains to be seen. But to me, the direction on Apple is going to be down from here. It could just be down to retest, you know, that bounce zone around 150 once again, and then we can kind of reassess the situation. But in the short term, I think we still have lower to go. I think these lows from early this week and late last week are going to eventually get broken. The next one we're going to take a look at is a stock here, Tesla. And Tesla, this is another one that we called for downside. We pointed out, I want to go back to exactly why we called for downside, because I really want you to learn. It's all about learning here, all right? So we had this trend line. It started right here, got a bounce there, bounce here, several bounces, and then we broke back under it right here. So when you're drawing trend lines and you're watching other people's videos or what have you, you want to make sure that people aren't just drawing some random line on the chart and price isn't really reacting to it. Okay, so clearly you can see right here the price of Tesla is reacting spot on onto this angle. So we know that it's important, and we want, if we're bullish on Tesla, you want to see the stock continue to hold that trend line, because clearly it's been bouncing off of it for a very long time, and now that it's broken it, clearly that's a key thing, and we pointed that out. We pointed out that we were likely going to get rejected around here. We got that rejection that we were looking for, headed down to that first target near about 335, and now we're breaking even lower right here. Not a great look for this stock. And I believe earnings are coming up here. Earnings, honestly, crapshoot. And I'm not going to be holding any position on Tesla through earnings. So I forget if it's tomorrow or even tonight, but regardless, I'm personally out of Tesla right here, as earnings are coming up pretty soon, and it's always a crapshoot. But congrats on this short trade so far, from about 360 to about 325. You know, the chart really is not looking great at this point in time. We got to reassess. Maybe we can look for bounces down about right around here or so. That's a potential area. We bounce right here, a lot of sideways trading here, and then we bounce right here off of it, and that level is right around 306, 307. The next one we're going to take a look at is Google. This is another one that has earnings coming up, and I want to point out, we pointed out the false breakout that occurred just recently, and again, just to review, here's that resistance, here's that resistance, here it is reacting to that level, and then we broke over it right here, held over it for about 5 days, and then broke back under it right here. That was the false breakout. As you can see, moved nicely short from here. And again, earnings are coming up with this one. And to me, it's kind of a crapshoot with Google, because we got two things that went on here with Google, okay? So we do have this false breakout, okay? But we also are above, this is the last earnings right here, that we had a big decline right there. But as I talk about many times on these charts, is that when you recover over those gap downs, okay, big gap down on earnings, when you recover over those gap downs, so we did that right here, and not only did we break that, but we stayed over it. We're still over it, and you can see we're bouncing off of those levels right here. To me, we've got two things, one bullish, one bearish thing, playing tug of war, and to me, the risk versus reward in either direction, and I'm talking about just me personally, you can do whatever you want. There's a lot of other opinions out there, I really don't care, but for me personally, I don't like the risk versus reward on Google in either direction, just because I've got two conflicting things that are really just as much. But on the other side, if we did have a false breakout and it was still below this level, to me, that would be a great shorting opportunity, and I'm going to cover one right now that's just like that. So here we have Amazon that tanked last earnings right here. Big gap down on some big volume right here. This is a big reversal candle right here, and then a few days after that, here's the reaction to earnings, and here's the next day after that, all with huge selling volume. As you can see, where is any big green volume day? Okay, show me a green above average volume day. You can't find it. Here's a big red volume day, big red volume day, big red volume day right there. So lastly, we got rejected right here, right where we said we would at 1020, and headed lower right there, and we're still below that price point that we gapped down right here. So to me, I'm favoring shorts heading into earnings release on Amazon. I think that Amazon more than likely is going to head lower on earnings, just because we haven't been able to break back above that earnings gap down that we experienced last time. Okay, so that's kind of how we play it. You gotta recover. Okay, you have to recover over this price point in order for it to really show some strength. Okay, and that's what you got to focus on what's the reason that we didn't break over this? You know, when you look at the market, I'm just going to look at the S&P 500 really quick. Here's what the market did in that same time period, okay? We rocketed up to new all-time highs, all right, straight up practically. And then you look at Amazon, basically traded sideways here that whole time and then got rejected at these highs, okay? So there's no reason that Amazon shouldn't have recovered. So for me personally, that's a telling sign. The next one we're going to take a look at is BABA. This is another one we called for some downside, and we're getting some follow-through right here. And if you watch the last video I did on Alibaba, or maybe it was the one before that, I pointed out a couple of things. So we broke out of this little rising wedge, you know, and I just want to point out too that rising wedge patterns, you know, are in a very bullish market, you know, they've got to be perfect, and a lot of times, you know, they fail, okay? So you really have to pick your spots and have a perfect setup, okay? So not only do we have this rising wedge, but we have a false breakout here. Here's that clear level of resistance that I'm talking about. It ran into it for about a week and a half straight. Here it is again a few days before eventually breaking over it. So that's a clean looking breakout right here. And then boom, we break back under it right here. And then eventually we break this uptrend line right here. Now we're breaking the 50-day moving average. And the whole time that we were heading up into this rising wedge, we had a negative divergence on the MACD, okay? And again, like I always mention here on my videos, if you're only focusing on indicators, you know, MACD is heading down or RSI is heading down, and you're making a decision solely based off of that, you're going to have a bad time, because oftentimes, you know, you'll get a MACD that's heading lower. Like for example, right here, MACD was heading lower right here as price was heading higher, but look at that, boom, it bounced huge and went from about, you know, 150 all the way up to about 180. So you would have gotten screwed right there if you would have been just focusing on that MACD. But when you combine the MACD with patterns, with multiple patterns, we had a false breakout and a trend line break, that's where you can get some good results. And another thing too, if you didn't watch the last video I did on Alibaba, and honestly I covered this on a lot of other stocks too, Google as well, and Facebook we're going to cover next. But looking back at last October, it did something very similar here. You can see there was this rising wedge. We had this breakout. Here's that resistance. Here's that resistance. We break over it right here, hold over it for a couple of weeks actually, before eventually breaking back below that and the trend line right here at the same time. And as you can see, traded sideways a little bit before seeing a pretty big dump from about 105 all the way down to 87. Obviously, you know, if you go here, we got a big bounce and we made new all-time highs. But, you know, we like to focus on just the very near-term action on what's going to happen on these stocks. And I think that similar thing, you know, we're looking at, this was last October, the end of last October. What is it now? It's the end of October. So we've got seasonality on our side. We've got the same pattern exactly to a T. So I think that, again, a lot of evidence that is pointing to the downside for Facebook. I'm sorry, for Alibaba. So right now, we're going to touch on Facebook. And as you can see right here, we had this false breakout. I pointed this out when it occurred right here. So we had this resistance there. There it is again. Here it is again. Here it is again, before we eventually broke over it right here. Looked like a nice breakout, and then boom, broke back below it right there. So nice action if you play these false breakouts, okay? So false breakouts lead to swift moves in the opposite direction. So notice how last time we had a similar move right here. So here's that resistance, here's that resistance, here it is again, here it is again. We broke over it right here, and look at how it didn't look back, okay? That's the action that you want to see, okay? But here, tried to break out. That looked like a nice breakout, and then boom, got broken back underneath it, okay? Broken back underneath it, so that made it a false breakout. And look at what happened last October. Here we are, last October, right here. Look at what happened. We had this resistance here. here's that resistance, here it is again, here's that breakout, and then here's that false breakout right here, and then here was that earnings release that was not too long after that. So we got that false breakout before earnings, and I think the same thing is going to happen. All right, so again, obviously we went from, it was a big dip from about 130 down to about 114, so about a $15 drop, and then obviously we rocketed up after that and recovered nicely. But again, we like to cover the very short-term moves here because that's what a lot of people like to see, and that's what we trade at thetradinganalyst.com in the premium membership. So thank you for stopping by and watching the video, everyone. I really hope that you learn a lot. That's why we make these videos. We want you to learn and get better as a trader. If you want to step up your trading game one more notch, step up your learning, step up your winning trades, then go ahead and sign up for the premium membership. As soon as you sign up and join the premium membership, you're going to get instant access to the profitable trade alerts that our current members are getting on a daily basis. It's a great opportunity for you, and we'd love to help you start making winning trades in the market.